Hey traders, Lance Ippolito here. Let's get to a market update video. So we're finally green on the year in the SPY. Normally when this happens, if we look at a prior history, we'll have a big up day. Maybe that will be today. S&Ps are up 9 now after the CPI data. And then we have the following day a little shaky and then a sideways day. So you see every time we break out, boom, up day, boom, breakout, boom, big up day, big up day. So what I think it is I trade a lot off the overall view of the market, and I want to go on the other side of retail, how they think. So a lot of people are going to wake up today and say, oh, the S&P is up for the year. Finally, stocks are safe again, so to speak. We look at the diamonds. The diamonds are really close to becoming, or the Dow really close to becoming green on the year. So people say, okay, good, stocks are up. I need to put my money in stocks. So what happens here? And we see the Nasdaq here clear move to the upside, taking out resistance. Say I'm going to put my money in stocks. Well, we know retail investors, there's no free lunch in trading or the financial market, so usually they have to take a little bit of pain. So today I'm looking not necessarily for initiating all these new long positions and getting long in the tooth just to have a sideways day or so. Tomorrow, of course, we are looking at Friday. Friday is usually a short squeeze day if obviously news is good. And also too, I also noticed that usually option monthly expiration, so that would be next week, my birthday on Wednesday, is usually bullish. So I'm actually looking for maybe a rally today, sideways, and then we probably short squeeze a little bit Friday. And then Monday and Tuesday, a little bit of sideways action, trap those retail investors in, and then we rally into May 17th and 18th. A couple names that are starting to see some bullish option flow that I feel like is worth mentioning here. MGM has Investor Day today, so look for that one. When obviously a beautiful breakout here to the upside, another casino correlated. LVS up there as well, and then Caesars. I rarely ever trade it because the options are so bad. No love for me there. The IWM, if we make a new highs in small caps, even in micro caps, the SPY should follow there to the upside. We're looking at crude oil and the energy names. We look at MRO, big break here off a bull flag, Devon, all strong names. What you can do here is, we look at like Conoco, MRO, some names that are overextended. You could look at some of the smaller names like Range Resources, even like CRC, some of these names that have been beat down a little bit, even like Halliburton or so, to try to play catch up and look and see if there's a high short interest for potential for a short squeeze there. Also, a couple names seeing some flow at Teradyne, a semiconductor. That leads me to Micron. Micron, everyone loves it, but it's been beat around the bush. Finally, over 50 here with NVDA earnings today after the close. NVDA big run up. People ask me, Lance, are you trading NVDA earnings? Well, my thing is, obviously I think permeable. I think mostly all stocks go up. But with semiconductor earnings, it's kind of a joke there. Semiconductor earnings, we've seen multiple names report really good numbers, and they've sold off on earnings. Micron, AVGO, just a couple there. Even Microchip had a crazy earnings. We're looking at NVIDIA, and we look at the market maker's implied move. We can look here. This is the event for earnings or the weekly, so May 11 expiration. It's about $15 here. So I add $15 to 255. That leaves me 270. 270 calls are going for 280. They seem a lot, very rich to me. Even if the stock trades at 270, let's say 275, those calls only go to $5. It's not even a double of my money, and I'm taking all that risk for earnings. So I really don't know if I love that too much with the pretty big implied move here in NVIDIA. Now, if I think it moves 10% at $25 to 255 or so, then I'm looking at about 280. The 280 calls are going for $1. But what if the stock moves up to, let's say, 275? Those 280 calls are probably going to go down in value. So I need to look to see what's the biggest return on my trade. I could spread the trade out. I can buy an outright call if I think it goes lower. I could buy a put or so, something like that. Just remember, implied volatility is juiced up to the gills around an earnings event. So in NVIDIA, I probably won't trade it, but what I will be looking at is similar names in that sector. It'd be like the Intel or Micron, even the SMH index I could even trade. That will move if NVIDIA, let's say I think NVIDIA goes up, I could get long, let's say Micron, or Intel or another semiconductor stock. So I won't have to buy all the implied volatility, which that is the goal. Thanks everyone. Feel free to check out the website and join. It's $30 a month. I mean, it's very, very cheap. TradingCoachLance.com, or shoot me an email. I'll get you set up with a private Twitter feed and all that good stuff like that. There we go. Private Twitter feed. All good with trade updates and everything. Thanks.